What's going on, guys? It's Daniel from CoinSpots here. I hope everyone's having a good Thursday. I'm having a pretty good Thursday. I made a solid trade last night, so I'm pretty stoked. I'm going to get into that today. But make sure you guys hit that like button, hit that subscribe button. I'm cranking out these videos Monday through Friday, doing some TA, doing some FA, updating you guys on the news, what's going on, how to make better decisions, and just basically how to capitalize on this crypto boom that's going on, and also basically documenting my journey through it and how I'm improving, because I'm always learning too. I don't claim to have all the answers. And I think it's just really good for me to put out kind of what I'm doing and helping out, some of the newer people who might not understand and stuff like that. But yeah. So today we're going to be, per usual, looking at Bitcoin, then Ethereum, and then three pieces of news, specifically Bitcoin and crypto and kind of how it relates to the consensus conference that just ended. A funny little ICO troll scam site called Howeycoins from the SEC, and then Bitfinex requiring tax information from its users. So, Bitcoin on the 4 hour, that's what we're looking at right now. And basically, yesterday evening, I posted a little chart on Twitter talking about this potential SFP that Bitcoin was having or could have. And I nailed it. And I am so stoked right now that I did that. This swing high right here on this white candle, where this at 84.25, and then you see this huge wick extend above it but close below it, basically confirming the SFP, the swing failure pattern. We tried to break above the previous swing high but could not, and as I said, close below it. And basically my short entry was at the opening of this candle, which was around 83.58. So, give or take a few dollars around there. That's when I opened my short. And right now I am looking pretty good. Let's see, we're at, what are we at? About 1%, 1.5%. And my first target is the 0.5 Fibonacci level, and then it is the 7,800 level. And then after that, it's the 7,600 level. And progressively, I'm going to be moving my stop down if this price keeps going down. So right now, I'm pretty happy with my call. But as I said, it could have gone another way. This was just one way to look at it. There were a ton of other SFP setups that could have happened, but this was just the kind of bearish scenario, which is kind of what I'm leaning towards right now. As I've been saying, this constant retest of this 0.5 Fibonacci level / weekly support just makes me think that it's going to break soon, because there's been no space in between the retests. However, that's just one view of the market, or one view of Bitcoin specifically. A lot of people have actually been talking about this inverse head and shoulders pattern and this falling wedge that's been going on here on Bitcoin. So I decided to, consider this as well. As you can see, there's so many different ways you can do technical analysis, and that's why some people are bearish, some people are bullish, right? Technical analysis just gives you or attempts to predict what's going to happen in the market, right? So as you can see here, we have this inverse head and shoulder with one shoulder here, the head here, and a potential right shoulder here. Obviously, this is not a very clean head and shoulders pattern, as this shoulder is kind of all out of whack right here, but we do have this descending wedge, which is basically a bullish pattern. So we could bounce right off of this 7,800 level, which is a key level that I was talking about in the previous videos, and that could give us the momentum to retest this 99, 10K level again. So, as I said, another way to look at this. Personally, I I'm short right now, but I will also be looking to accumulate at the 7,800 level. But yeah, two different ways to look at Bitcoin currently and kind of where it's going to go. So moving on to Ethereum. Ethereum is actually looking a little bit bearish. Another potential SFP on Ethereum with this, what is that? 8. That is, I'm not even going to be able to read that Satoshi level, but right here, potential SFP with confluence at the 0.5 Fibonacci level. I cleared the other Fibonacci levels because I do not trade those. These are the 3 ones that I trade. And what I'm thinking is going to happen is we're going to have a little SFP going on. We're going to have a wick of a candle go above this wick of this candle right here. So basically where this line is, and we're going to close below it. And once that happens, once that confirms, whether it's on the daily or on the 4-hour, then I'm going to probably open up a short at the open of the next candle. And my price target is probably going to be this 382 fib level here. So that's kind of what I'm looking for on Ethereum right now. Bearish short term. I don't think the whole bear market thing where people are still tooting off 3K Bitcoin and who knows what for Ethereum. I don't think we're gonna go crazy low like that. But I mean in the short term, I definitely think we're a little bit bearish, losing a little bit of steam. And both of these TAs basically kind of translate or fall into this headline that the Bitcoin price and crypto price in general fails to rally after the consensus conference, which is pretty much the biggest Bitcoin conference or crypto conference in the world right now. And I've been seeing this on Twitter a lot. People were predicting that there's going to be a crazy pump. There was for Zcash, right? And not going to get that wrong because of the whole Gemini accepting Z or becoming SEC regulated for Zcash trading. However, a lot of people thought that there was going to be a Bitcoin pump and a lot of altcoin pumps, and honestly, there wasn't. So I think it's really important to more so stay true to the TA rather than just trading off of news. Even though the crypto market is still really dominated by news and pretty much just market sentiment is what swings the prices. It's not. I mean, I think as we've been progressing more and more, the impact of news on the crypto market has been less and less. Because I remember right when back in August or sometime like that of last year when we had the whole China FUD of China, banning Bitcoin and crypto exchanges. And then we had something similar to that in South Korea, but the impact of that was not as big as what happened with China. And I think unless there's just a huge piece of news like, I don't know, Tether is found out to be a scam, because there was an audit and they don't, or Bitfinex doesn't have the US dollar backing Tether, right? Something like that, some huge crazy news like that would impact the crypto market. But I really don't think stuff like this, like, there's going to be a Bitcoin conference or a crypto, I keep saying Bitcoin, there's going to be a crypto conference, price is going to skyrocket, or this coin is releasing a new wallet, right? Price is going to sky. Those things are just short-term strategies that aren't going to necessarily be able to be replicated in the long term, because after everybody is anticipating that, right? Everyone's anticipating the price to pump because of this consensus conference. 9 times out of 10, that strategy isn't going to work anymore, right? Because so many people are anticipating it. So I think trading based on a lot of the headlines is not really useful anymore, because what a lot of people have been predicting, and right now in this case, it's the consensus conference. Everyone was thinking there's going to be a huge pump, but there wasn't. And as I said, I honestly, I feel that that's really just becoming the case, at least now for crypto. Unless it's some crazy news, as I said, I don't think it's going to impact the markets as much as it used to, especially last year. So yeah, moving on to Howeycoins. So basically what this is a fake or a troll ICO website that the SEC made to inform people about scammy ICOs. Honestly, though, when I first got on this website, I knew it was, it just looks fake, to be totally honest with you. If you go through it, like, I can't put my finger on it, but a lot of people just look at this and think it's fake, which the same thing happens for me. But once you go to and you click buy coins now, it brings you to the SEC website and basically how you could have been scammed if you actually purchased these. Nonetheless, I think this is a really, really good approach by the SEC, and I'm honestly really surprised and kind of excited for what kind of regulation is going to be coming out. And honestly, I know that sounds kind of counterintuitive, regulation and crypto, right? People don't want regulation, but regulation is A, inevitable, and B, it's going to help the crypto space grow. However, draconian regulation is not going to help the crypto market at all. And the SEC has definitely said that they want crypto to flourish, and they don't want to stifle innovation. So creating resources like this, where they're basically providing an educational tool to help investors or educate investors to identify scams themselves, I think that that's the best way to help people in this space, right? It kind of goes back to that saying, like, if you teach a man to fish, you'll feed him forever, or if you give him fish, you'll feed him once. I know I totally butchered that saying, but that's kind of the gist that I'm trying to get at here, and I think the SEC is trying to get at here, because if you just create regulation after regulation, that's going to stifle innovation, and also scammers are just going to find their way around it, right? So giving people the tools and the education and the resources that they need to find scams and how to stay safe in the crypto space, I think is the best way to tackle this problem, right? And us as YouTubers, I think, should really provide resources for the newer people to, help understand how to navigate their way through the crypto space, right? Because if people are self-reliant, self-sufficient, I think that that's the best way for them to grow, to educate themselves, and how to survive in the cryptocurrency space in general, So I'm really happy about what the government is doing, which is somewhat surprising that I'm actually saying that. But SEC, I'm pretty happy about what they're doing, and kind of this laissez-faire approach that they're taking for the crypto economy. So good job to the U.S. government. And now finally, Bitfinex requesting tax data. Man, this is interesting, because Bitfinex used to be one of the most lax exchanges in terms of KYC rules or know your customer rules, and now they've pretty much turned into one of the strictest exchanges, even stricter than Coinbase. Now, obviously, being in the U.S., I can't use Bitfinex, but I think this is going to be a trend that is just going to continue, right? Because government wants to know what people are doing with crypto, and obviously the taxes that need to be paid. The first thing that you think about when you think about government is taxes, and they want to clamp down on what people are doing, what money is being moved where. So stuff like this honestly isn't that surprising. We had the whole episode about or in Korea about it, how you had to, I forgot what it was now. I think before, Koreans could use like virtual bank accounts or something, but the government now banned that, and they made Korean banks, institute better, know your customer regulations and stuff like that. So, doing Bitfinex doing this with authorities honestly isn't that surprising, because at the end of the day, the government wants their money. They want to know how much money people are making in the crypto space. So I know it sucks, but it's something inevitable that's going to come up, until decentralized exchanges come about. But decentralized exchanges have their whole slew of problems with them, specifically the user interface about them, right? Considering that crypto is already basically a really big wall or a big hurdle to jump over in order to get into it, making people use decentralized exchanges is going to be the same thing, right? If you give a person on the street, a hardware wallet or a computer with an Exodus wallet, right, they're not going to know what to do with it, right? They're not, because they're in control of their own finances and they need to manage their own money. So making people start using a decentralized exchange is not going to be very pleasant, because it's right now, obviously, they're really clunky and they have their whole set of problems with them, right? If you've ever tried to use Ether Delta. So that's why decentralized exchanges, I don't think, are always going to be the go-to answer. So stuff like this with centralized exchanges required to share tax data with authorities, I think that's just something that we should all expect pretty much at this point. So yeah, that's pretty much it for the episode today. As always, stay safe when you're trading. Don't trade off of Twitter. Don't trade off of me. I'm just sharing what I'm doing. This isn't financial advice. Gotta say that. But yeah, hopefully you guys enjoyed the video, and I will see you tomorrow.